The great market crash of 2049. It was a lovely sunny morning on the 24th of June 2049. It was a Thursday, but who would have known that as soon as the markets opened, there would have been a wash of red with double-digit declines all over the place. Several quadrillions wiped off stock markets from around the world in an instant. What were you doing when it happened? I imagine that I'll have just sent my brother a happy birthday message via my new telepathy device with my latest Neuralink implant. He will have just turned 56, which means I would have turned 58. At this point, I've got to say I'm hoping to retire, so maybe I'll have been at my works do. Who knows? As most of you know, I'm not the sort to be an alarmist. I can't stand those thumbnails that are claiming that the end of nigh is any second from now. But allow me some creative license with the year 2049. Come on, just give me a break just for once. There is a reason for this headline though, as there's a particular topic I feel that doesn't get half as much attention as it should do. I honestly believe there could be dire consequences if you're under the age of 45. The world is changing and it's going to be looking a lot different in a time frame far sooner than you might think. Today, I want to talk about the world's evolving population structure and how this will likely make a significant impact on your life and especially your finances. Everything from the stock market performance all the way to taxes. So what am I on about? Well, today I'm here to be the canary in the coal mine about our ageing population. If you're watching this, then you're likely part of the problem and you're unknowingly causing it, but you're also likely to be paying for it at some stage. If you're not sure what an ageing population is, then this purely means that the proportion of older people in any population of any given country or region is growing, or you can think of it as the average age of the average person increasing over time. First, let me explain why we have an ageing population before we look at its impact. It's ageing for the following two factors: fertility rates and life expectancy. Let's start with fertility rates. A population will remain the same size if the birth rate is just 2.1, meaning 2.1 children per woman. You might expect it to be 2, but do consider that some people sadly pass away before they can have kids. If the birth rate is above the number of 2.1, then the population will grow, but then if it's under 2.1, then the population will shrink. It used to be widely believed that some cultures generally had more children than others, and this led to concerns over overpopulation. If you're around my age, then you're likely brought up overhearing conversations around population growth being out of control and how we're going to have room for 50 billion people in the future and all those sorts of things. There was a large dose of concern that the world's population was expanding far too quickly and that there was going to be issues with food and it was going to be too scarce. And actually, where's everyone going to live? Did we have enough housing for everybody? And then, God forbid, imagine there was immigration on top of that. I really can't wait to talk about immigration in this topic. It's really quite funny, but we'll get to that later. But the concerns about population spiraling out of control is actually the opposite problem we have. And this brings me back to fertility rates. After all, if people are having 7 children on average, then it's not going to take too long for that population to explode. But culture is actually only a very, very small part of the puzzle. The biggest part of the puzzle is actually wealth. It's been shown that as a nation gets wealthier and education becomes more widely available, the birth rate drops. This is for several reasons. The first is that the advances in healthcare mean that more children survive to adulthood, so there isn't as much need to have as many children. On top of this, individuals gain better access to contraception, so actually there's less happy accidents, or maybe less unhappy accidents if you had too many at a bar, but anyway, that's completely on you. To give you a real life example, Bangladesh used to have a birth rate of 6.95 back in the 1970s, but just in 45 years, the birth rate has fallen all the way down to 1.8, where it's actually expected to stay in the long term. This means Bangladesh's population has boomed from just 30 million in the 1900s all the way up to 150 million. Obviously, at a rate of 1.8, this number will start to fall, but there actually is a lag time in terms of population. So their population is expected to peak around the year 2055, but then this will actually start to shrink and will drop back down to about 150 million by the year 2100. As a different example, Japan's fertility rate hit 2.1 back in the mid-1950s, and has actually continued to decline to as low as 1.5 now. I'll explain a little bit more about Japan on its impact on the population and economy shortly. It's really interesting. So that's a brief lesson in fertility rates, but we also need to be aware of another factor, which is actually people are living longer, which is actually a great sign of progress in society today. No matter what your background and on the most part what country you come from, your average life expectancy is growing over time. This means people are spending a lot longer in older age than they have ever before. If you live in a westernised country, then the average life expectancy is likely to be somewhere between 75 and 80, which is 5 more years than it was just 40 years ago. You might not think it's that much of a bigger difference, but it really is. You might be sat there thinking, so what, Nick? There's a load more coffin dodgers out there. Why does it really matter? Well, I will tell you why it matters, but first I need to look below this video, look at that ugly grey thumbs up button and turn it into a smurf. Anyway, thank you for your cooperation, it really helps out the channel. Well, let me show you a graph on why this is an issue. What I'm showing you now is a population pyramid. The graph is split by gender on each side and the age. Males on the left, females on the right. Age 0 at the bottom, all the way up to the 90s and 100s all the way at the top. This is a graph of what the population of the UK looked like in 1951. In general, it has a slight cone shape, and I've actually done the hard work to let you know that 16% of the population was aged 60 and over. This would be very similar to other westernised countries like the US and Canada. Now we have the UK's population as it is right now. In that time, the total number of people has grown by 50%. It still has a vague cone shape, but it's definitely a little bit fatter at the bottom, and there's actually a fairly well balanced amount of people between the age of 0 and 50. At this point right now, just short of 25% of the population is aged 60 and over, so a 60% increase since 1951. Let's now skip forward to the held market crash of 2049. The population has only grown by 10%, but the pyramid has definitely lost a lot more of its shape, and it's actually starting to narrow towards the bottom, showing that the population is starting to narrow, which is actually a sign of it starting to shrink. At this moment, nearly 1 in every 3 people is aged 60 and over, so in 100 years the portion of people 60 plus has doubled, meaning the number has gone from 7 million people to 25 million people aged 60 and over. The problem with people in their 60s, and I am generalising here, so don't let your blood pressure get too high, Grandad, it's not good for you. They aren't that good for the economy. They spend less money, they contribute far less taxes, and they soak up a large amount of portion of the welfare funds from the government. So businesses won't be making as much money as people aren't spending as much money. The government won't be collecting as many taxes, and on top of all that, the demand for welfare support from the government will skyrocket. In response, the government will need to increase taxes, which will largely fall on the ones earning an income, meaning they have even less money to spend on businesses, and then the spiral of doom continues. You might say, well, surely the government will impose taxes on the elderly. You would have thought so, but have you ever considered that the older demographic is already a powerful demographic within the political spectrum, and they're actually only going to become more powerful over time? What kind of politician is going to lead with raising taxes on the elderly? Surely that would be the quickest way of not getting elected. Maybe I should start some kind of campaign. Nick JM for 2048. What could my slogan be? Give them taxes or give them death. Yeah, I'm probably need to work on that a little bit more. So what impact is this going to have on the stock market? Well, I haven't got a crystal ball, but only if we knew a country that had a similar demographic to the UK's projection in 2049. Who could we look at? Well, we're actually in luck, as Japan have been on this pain train with an ageing population for quite a while now. But if you're really interested in this topic, then I would highly recommend you check out China's population pyramid. They have truly shot themselves in the foot by implementing this one-child policy. It's not that surprising that they reversed it back in 2013, but sadly the damage has already been done to their population. But Japan does give us the best comparison for this video. So here we have the UK in 2049 and Japan in 2021. You can see that Japan's population is narrowing a lot quicker, but the portion of people over 60 is 34% versus the UK's 31%. So they're a little bit worse, but it's still very similar. So the question is, what has Japan's stock market done since the year 2000? Well, if you search your ticker symbol, TOPIX, which is the Tokyo Stock Price Index, you will see the following. In the last 21 years, it's grown a massive 10%. Ooh. So they've gained less than 0.5% on average per year. So the outlook for Japan is fairly grim. Once you factor in inflation, which for Japan is quite low, it's around about 0.5%. So actually, factoring this in, the stock market hasn't grown at all in 21 years. To give you a comparison, the FTSE 250 in this time has grown 250%, and the S&P 500 has grown 200%. Over the next 80 years, Japan is set for population collapse like no other economy has ever seen before. Their population is set to decline from 126 million all the way down to 75 million. By this point, 45% of all the people there are going to be aged 60 and over. But Japan isn't an outlier, it just happens to be the first. The world's population is expected to peak in the year 2064 at about 9.7 billion before it actually starts to go down. This doesn't mean that all populations are set to decrease in this time period though. Africa's population is expected to explode, but it won't be enough to plug the gap with all the declining populations around the world. I do find it slightly ironic that there's been actually a massive push in the West against immigration over the last 10 years. Whether it's immigrants from the Middle East coming to the UK or Mexicans crossing the border into the United States. I think it's highly likely we'll actually be pleading in the future for these same people, especially young people, to move to both the UK and the US in the future. And I would actually go as far to say that we're probably likely to be incentivising young Africans to come to the UK in the future to really support our ageing population. After all, who's going to be looking after the old for us? We just haven't got enough people to do it. The world economy historically has been supported by an ever-growing population of people, and equally the welfare system has relied on more people working per retired person. But what happens when there's less people working than there are retired? Amongst a few other topics, this one in particular gives me the biggest sense of dread, as I think it could be a very painful period for us all, especially for the markets. Think of the majority of people drawing down their pensions, and then the lack of demand from younger people purchasing stocks, which the retirees are desperately selling. I can't see any way that this isn't going to cause significant downwards pressure on the stock markets. The glory days of expecting 7 to 10% returns each year might be long gone by 2049, and there's a chance that markets won't grow at all following several years of large outflows from the stock market with declining inflows. I would love to know what your thoughts are though. Were you aware of this? And what do you think the solution might be? Maybe you think that this won't be an issue, as capitalism always finds a way. Let me know in the comments below. Anyway, that's all for this video. See you in the next one.